Hello, this is Alex Kazmark for the FXEdge.com, and this is the free daily Forex video for September 4th, 2009. One reminder before I begin, the purpose of this free daily video is education and not an alert service. I'm not going to make any trade recommendations here, but what I am going to do is point out levels of support and resistance for the next 12 to 24 hours. Please keep in mind that trading with leverage is very risky, so please don't trade any real money until you have established a proven track record of success on a demo account. Trading conditions are always changing, so make sure to watch Monday's video to stay updated. Happy Friday, everybody. Today is the day. Non-farm payroll numbers are going to be released towards the end of the day out of the U.S. Everyone is waiting for that number. Monday is a U.S. holiday, so expect some volatility out of Europe, not much action out of the U.S., and hopefully non-farm payroll numbers released today will point to some sort of a trend. Right now we've been locked in some of the ranges. Recently, dollar made a nice recovery over the last few days, but has given up a lot of ground. We're going to walk through the majors, see what's happening, and prepare ourselves for the end of the day non-farm payroll release. Looking at the euro, dollar on the daily, currently trading at 142.56. As we can see over the last couple of days, the dollar gained a lot of ground from that 143.50 area towards below 142. Wasn't able to close below the 142 level, ended up closing at 142.20. Lost a lot of ground. We were actually all the way back up to 143.50 overnight yesterday, and market couldn't maintain that levels ahead of non-farm payrolls, and we ended up closing around the 142.50 level. Our first level of resistance for the euro is going to be found at 143. Above 143, we can see 143.50. More importantly, 144 and 144.50. First level of support is going to be found at 142.20, followed by 141.80, 141.34, and 140.80. Below 140.80, we have 140 even. Be very careful when trading the non-farm payrolls numbers released. The very first reaction that you see could be the right one. However, over the last few sessions, we've seen that to be the opposite. Over the last few sessions, what we saw is that the first reaction might be to the upside, in which case it retraces coming down and leads lower. There have other been times where we've seen a move up before crashing down and then another move following up. So there's usually a lot of volatility during non-farm payrolls releases, so don't trust the very first reaction. Now, if the numbers come in much better than expected, we could see the equity markets rally, and the dollar could lose some ground towards the 143.50 range, 144. If we go through the 144 range, expect 144.50 to be the next stumbling block for the euro. If the numbers come in as expected, we may see little to no reaction. The reaction may not come until the following Monday, at which point Asia and Europe will start to analyze the numbers and perhaps set a trend in place for the US markets to come into on Tuesday. If the numbers come in worse than expected to much worse than expected, we are going to see a dollar rally. Expect 142.20, 141.80 to be broken into the 141s, testing this 50-day moving average, and below the 142 level we're going to see 141.34 and 140.80. Below 140.80 we're going to have 140. I don't anticipate to break below the 140 level tomorrow. Would that be quite a big move of 2.5 cents? However, much worse than expected numbers could definitely target below the 141 level. Let's take a look at the pound dollar. Currently trading at 162.26. We covered these levels yesterday. It's always interesting to point out levels of support and resistance because we see these levels respected over several days now. First level of resistance for the pound is going to be found at 163.34. That wouldn't be a considerable level because we're so near that. The level above that would be the 163.78 and 164.25, these being the two more significant numbers. Above the 25, we have 165.41 and 166.23. The dollar continues to gain ground. We're going to see support for the pound at 162.25, followed by 162, 161.60, 161, and 160.30. If the employment numbers come in much worse than expected, we expect these lows to be tested, perhaps even a break of the 161 level to go below the 160 target, or 159.80. Next up, we have the dollar yen. A little bit of price consolidation. Equity markets closing just a little bit higher today, ahead of tomorrow's data. The yen is a bit different animal here going into the non-farm payroll numbers. I'm not quite sure how the yen may react, considering we've gone below the 92 level. Worse than expected numbers are going to push equities down, and of course the dollar yen with it. So I would really watch the equity markets tomorrow, how they react to the data, and follow the equities. First level of resistance for the dollar is going to be found at 92.85, followed by 93.27. These two levels could be combined to the 93 figure even, with plus or minus 20 in either direction. Above the 93.20, we're going to see 93.80, 94.50, and 95 even. If the dollar continues to lose ground tomorrow, we're going to see 91.80 tested, followed by 90.90, or 89.82 below that. Below 89.82, we have 88.57. We don't expect to go that low tomorrow, but anything is possible. If the numbers are much better than expected tomorrow, we're going to see a dollar rally against the yen. We're going to see 92.85 as the first level of resistance, followed by 93.27, 93.80, 94.50, and 95 even. I wouldn't be surprised to target the 94 level tomorrow, perhaps 94.50 level. May even go as high as 95, but if the numbers are much better than expected, 94.50, 95 would be the two highs that I'd be looking for. Next up, we have the dollar Swissy, currently trading at 106.20. First level of resistance for the dollar is going to be found at 106.26. Number wouldn't be too significant considering we're so close to that level now. Above that, we're going to see 107. As I'm looking at this information, I'm going to put these two levels of resistance in here. These are the open and close levels for the 1st and 2nd of September, as well as the 26th and the 27th of August. That's 106.50 and 106.76. Perhaps make that the 106.80 level. So once again, from 106.18 now, we're going to look past this 106.26. We're going to look for 106.50, followed by 106.80, 107. Above 107, we're going to see 107.40 and 108. First levels of support for the dollar are found at 105.85, 105.50, 105.27, and 104.77. Below 104.77, we have 104.11. Okay, traders, be very careful trading the non-farm payroll numbers. During times of increased volatility, there's a lot more risk of being stopped out in either direction. My suggestions are always to wait 5 to 10 minutes after the release of the data before any trades go in. Reason why is because those 5-10 minutes could be very, very volatile, including some of the traders that may be trading with variable spreads. You're going to see an increase in those spreads. So be very careful when buying and selling. If you're on a fixed spread system, be very careful of your order not being filled or hanging. Typically happens during volatile times. That's why we wait 5 to 10 minutes of trading. Unless you're dealing with hundreds of millions of dollars with a large bank, you're not trading during the first 5 minutes. That is, of course, if you don't want to lose any money. Okay, once again, traders, be very careful trading the non-farm payroll numbers. We'll see you here back on Monday. This has been Alex Kaczmarek for the FXEdge.com free daily Forex video for September 4th, 2009. And until tomorrow, good luck trading.